Basin Electric directors approved the 2018 operating and capital budgets for Basin Electric and its subsidiaries. Darla Miller, Basin Electric Manager of Financial Planning and Forecasting, provides the highlights.
As we lean forward into 2018, Basin Electric's cost of electric service is estimated to be approximately $1.65 billion. This is nearly $0.8 million more than the 2017 budget. Basin Electric's operating revenue is estimated at $1.7 billion. Member revenue contributes 90% to operating revenue, with the balance coming from non-member sales and miscellaneous revenue. The 2018 operating budget projects an additional $25 million to be added to the deferred revenue pool. Member sales are comprised of an average mill rate of 64.2 mills. This rate reflects no rate increases since August of 2016. The budgeted pre-tax margin estimated is just under $126 million. Now switching gears to capital projects. New capital projects for 2018 amount to $152 million, with cash flows of approximately $204.4 million, which includes carry-forward projects from previous years.
Kimberly Miller, Basin Electric Senior Business Analyst, gives the highlights of the Dakota Gas budget.
The approved operating budget for DGC includes revenues and other income of $484 million, where urea, synthetic natural gas, and hydrous ammonia and ammonium sulfate generate almost 80% of the anticipated revenue. The budget also includes expenses of $569 million, with coal, electricity, and labor counting for about 50% of the total expense in 2018, for a net loss of $85 million before tax and $55 million after tax. The 2018 capital budget is set at $12.5 million, representing the capital projects committed to over the course of the year. The anticipated cash flow for capital projects in 2018 is about $20 million. This amount includes the cash flow for the 2018 commitments, as well as the carryover commitments from prior years. The cash flow amount in 2018 includes roughly $11 million in continued work on the urea plant, budgeted at $740 million, with an expected completion in January. As we experience continued low commodity pricing, the staff at DGC and headquarters will continue to diligently monitor expenses and revenues in an effort to identify any opportunities available for strategic cost management.
The Board of Directors approved the 2018 operating and capital budgets for Basin Electric, Dakota Gasification, and Dakota Coal. The consolidated net income after tax for all of Basin Electric and its subsidiaries is estimated to be $72.9 million.